Deep in South Africa's northern Cape lies the Karoo, a vast, semi-arid desert better known for livestock farming than high-value crops. But beneath its harsh exterior lies a rare combination of conditions: cold winters, hot summers, low humidity, and crucially, access to water from the Orange River. It's a mix that experts say is almost uniquely suited to pistachio farming, a crop that's notoriously difficult to grow, but highly profitable.
Pistachio, by its nature, is built for the extremes of the Karoo, and that's what a Karoo is. A Karoo, it always falls from the one extreme to the other extreme. You would have extreme drought, and then you would have ferocious floods.
Even if the world production...
David Muller is CEO of Karoo Pistachio. He's spearheading a drive to bring together farmers and finance partners to build a new export industry. The ambition? To ramp up production from 20 tons to 60,000 per year by 2040, which would account for roughly 5% of the global market. With the US and Iran dominating global supply, South Africa's output could eventually rival smaller exporters like Syria. But that growth comes with uncertainty. Economist Casey Sprague says some of South Africa's current advantages may not last, especially if the country's currency strengthens.
The real risk isn't can we produce cheaply now, it's whether South Africa can really lock in reliability, yields, and export-grade quality throughout the cycle.
Because pistachio trees take at least 5 years before bearing their first fruit, these crops and others like it are turning to innovative financing models to inject immediate capital into the farms. Fed Group, a South African financial services company, has built an investment structure around that uncertainty.
We've gone and built quite specialist investment products that allow us to segment the way in which someone finances that physical asset. So you can actually go in and you can buy a nursery sapling, and that nursery sapling gets to a certain level, and then we allow you to get your money out, and that gets sold to, for example, a farmer. And someone else can come along, or a pension fund can come along and invest in a whole orchard, for example. And it's just patient money.
For investors, the appeal is clear: real assets, long-term returns, and exposure to global food demand. But these models also rely on long-term stability, something South Africa's agricultural sector hasn't always guaranteed. For now, new financing is helping scale the industry, but it's also trying to solve a deeper challenge.
That the game changer isn't just money, it's lowering the project's risk premium, improving bankability, and accelerating scale as well.
We really have the opportunity to give people that previously didn't have the opportunity to enter into almost like this, let's say, funnel going into commercial farming.
For the Karoo, the stakes go beyond agriculture. The region faces economic decline, high unemployment, and increasing climate volatility. Pistachio farming offers an opportunity to counter these negative trends. In a world where climate change is reshaping what can be grown and where, the Karoo's pistachio experiment is a test of whether a high-risk, long-term crop can succeed in a volatile environment.